Spectrum Group recently published a report about alternative investments in the portfolios of wealthy households. Catherine McBreen, president of Millionaire Corner, is here today to share some of the highlights of the research with us. Tell us a little bit about the research. Who was included?
Well, we included households of ultra-high net worth families, and those families have $5 to $25 million of net worth. And then we also included 200 households that had over $25 million of net worth. And all the research was done within the last 12 months.
How to define an alternative investment?
So alternative investments are all investments that mostly are non-market based, but it also includes hedge funds, private equities, venture capital, private placements. And then it will include commodities, futures, options, and we also included real estate, and we also included collateralized debt obligations. And those CDOs are what caused all the problems with the financial crisis.
Okay. What were the differences between the individuals that own alternative investments and those who do not own alternative investments?
Well, we found that about half of the people owned alternatives and the other half didn't. And there were some interesting characteristics between the two different groups. First of all, it was a little different than you would think. The people that owned alternatives were very thoughtful investors. They were very organized and they were really into investing. They enjoyed investing and they liked to manage their day-to-day accounts. At the same time, the people that didn't have investments were more likely to have attributed their success in life to luck and to inheritance. So they were people that were a little more mishmashy about their investments.
Do wealthy investors use an advisor to assist them in finding alternative investments?
Yes, they do. It was interesting that we found that the people that did not own alternatives were much more likely to call themselves self-directed. They may have used an investor, but they thought of themselves as self-directed. You would have thought the other way around. We also found that the people that used alternatives were more likely to use a full-service brokerage firm as their primary advisor. And we don't know why this is, but we think that maybe those types of firms bring these opportunities to these investors, as opposed to the people who use, for example, private banks were the least likely to have alternative investments.
Any other interesting findings?
A lot of the people who owned alternatives, most of the people who owned alternatives were business owners. So business owners are a little more likely to own alternatives than people who aren't business owners. That kind of goes with a little bit of the more aggressive risk profile. They also, 40% of the people who own hedge funds own 3 or more hedge funds. So that's a lot. So once you do it, you kind of are into it. And also the thing that we found that was interesting was that those people who owned alternatives were also more likely to own real estate as an investment.
Thank you for sharing this interesting research with us today, Kathy, at Millionaire Corner. For those of you who want to find out more information about this, please visit spectrum.com. I'm Kiely. Thanks for watching.